It's really a pleasure to be here this morning. So I'm going to talk about some ideas that are maybe a little beyond the horizon. So think of this perhaps as more of a vision talk than purely a description of work that's already been done. And I hope it spurs some ideas in people's minds, and I'll be very happy to have some time for Q&A and discussion as I go through the talk and after the talk in particular. So just to give a little bit of background about my interests, I started out really working on wireless networks, and that research kind of grew into wireless sensor networks, the Internet of Things, and also then connected vehicles. But over the years, sort of consistent themes in my research have always been about looking at how machine learning and AI can be used to improve connectivity, to improve some of the networking aspects of this, as well as distributed computation. And then in the last 5 years or so, with the rise of blockchain technologies, we have kind of new capabilities that have emerged. And so I like to joke that really all I'm working on are the simplest things in the world: ABC, artificial intelligence, blockchain, and connected devices. I do have a blog entry about it, which I'd like to point to people if they might be interested, that kind of lays out a little bit this landscape of emerging technologies and why these three technologies in particular, they're complementary to each other, and why they're likely to have a lot of impact in many, many domains, not just mobility and vehicles, which is of course our focus today. So, as we think about what vehicles are, they've really changed and grown over the years to becoming really substantially devices that have a lot of computation on board, a lot of sensing on board. Today's cars have anywhere between 100 to 300 microcontrollers, large numbers of sensors. And while initially a lot of this technology was focused on making the driving experience comfortable for the driver, of course, we've now moved on to putting some of these sensors facing out and allowing the car to gain an understanding of the world outside its own interior. And with computation, with the ability to take that sensor data, process it, and then exercise control over the vehicle, we're leading towards this world of autonomous vehicles. Of course, many of us have seen these various stages of autonomy of vehicles, going all the way from no autonomy to driver assistance to partial automation, conditional automation, high automation, and so on. And as we've been kind of embarked on this process, the question really has to do with what are all the functions that we hand over to the vehicle, right, that traditionally humans would do. So going all the way from humans do everything in terms of driving the vehicle to humans do nothing in terms of driving the vehicle. They're essentially just passengers. You don't even need a driving wheel in the car. And so as we've been doing a lot of research and development, and various car companies are at various stages along this timeline, it occurred to me to kind of think about what comes next. What other capabilities that we might still expect of humans to be doing with respect to the vehicle might also be handed over to the vehicle. And I think this is really what motivated me to kind of embark on this set of ideas which I've put together in this talk. I should again mention there is an article that I wrote that is on Medium called Financially Autonomous Vehicles, where I laid out some of this vision that I'm describing today. But essentially, the crux of it is that autonomy, not only in terms of driving themselves, but really all of the other ways in which they might interact with the world around them, not just in terms of moving through it, but in terms of exchanging data, exchanging goods and services, and what that might look like. So if we want to start to expand our view of autonomy, it might be helpful to kind of think about all the things that a vehicle needs, right? And then what are all the things a vehicle might have to offer? And if you think about kind of this list of needs for a vehicle, it might start from, well, it needs some kind of fuel or energy to get going. It might need repair, maintenance, or upgrades over its lifetime. As it's driving, it might need directions. If there are events that happen that are very kind of short-term and very localized, perhaps road hazard information or safety notifications or closures that have just happened because of some events, it might need that information. Vehicles might benefit from any help they can get to move faster through traffic to get to their destination more easily. They might need a place to park, depending on where they're going. They might need passengers, depending on what type of vehicle this is. They might need data from nearby sensors, not only the sensors that are on board the vehicle, but perhaps the sensors of another vehicle that is in front of it, to be able to kind of extend its perception or augment its perception, as it's called. It might be sensors that are on the infrastructure that it wants to leverage the data from those sensors in order to help it navigate better. It might need computation resources. So as we look at autonomous vehicles today, they're becoming computational platforms. There's a mismatch between the typical life cycle of computers and cars. A typical car might be on the road anywhere between 7 to 14 years, if not longer. A computer is typically obsolete in a couple of years, right? And so because of this, it's quite likely that whatever computation capability a car came with on day one, the hardware is no longer sort of capable of the most advanced computations that are needed in maybe year 4 or 5. Now, you could go ahead and replace that hardware, but if you could also leverage computation that's outside the vehicle as it's going about its day, that might be helpful in some cases. And this could be computation in the cloud. It might be computation on roadside units or in edge computing boxes, but there may be sort of computation resources a vehicle might benefit from. Communication resources, what can help get its messages or information to and fro in a better way. Storage for the data that's generated by the vehicle. It could be sensor data, it could be driving data, it could be anything that is relevant for its own training purposes, for example. Or it might be data that, as we'll come to it, perhaps it's data that it might be able to do some transactions over, and you just want a place to kind of store that data. So those might be needs that a vehicle has growing in the future. As they become much more computational units, much more software driven, it may also need more intelligence. One big difference between sort of biological intelligence and artificial intelligence is that the architecture for the intelligence, the algorithms that are driving the decision making and deriving of insights might get better over time. And so you have a piece of hardware, it's got some software capability in it, but the intelligence can actually grow over time, right? As you are able to upgrade the software, as you're able to literally download new algorithms, you might have a piece of hardware that's getting better and better at doing what it's doing. Years ago, I had this kind of epiphany and talking to other researchers that when it comes to the Internet of Things, when you can connect it with machine learning and artificial intelligence, you suddenly have hardware that can actually appreciate in value over time because it's gained a lot of experience and because the software that's driving it might actually be getting better over time. So, typically and traditionally, hardware depreciates over time, but when it comes to artificial intelligence enabled devices, then you have kind of this potentially opposite trend. But again, this might be something that a vehicle is able to get from some other source, and therefore might be kind of a need, if you will, for this vehicle. So then on the other side of this, you can say, well, what can a vehicle offer the world? It has all these needs. What is it going to be able to give back? Because there's no basis for really becoming financially autonomous if you don't have something to offer, if you only want. And so, so here's a list of things that a vehicle might be able to offer in return, right? It might be able to offer a ride to humans. It might be able to offer a ride to goods. It could be a package delivery vehicle. It could become part of a supply chain system, for example, and maybe on a temporary basis, not permanently allocated for that task. It can be a sort of a launch vehicle for drone delivery. There's some very interesting concepts that are being developed where you kind of have a vehicle that drives on the road, and then the last mile delivery is happening over a drone. And so you've kind of got this combination of a vehicle and a drone together doing delivery of everything from small packages to food delivery and so on. You can have one vehicle potentially, over a short term, offer some kind of fuel or charging capability to other vehicles, perhaps on a limited basis. You can imagine a vehicle carrying on board batteries that it can supply to other vehicles on the road. You can imagine one vehicle offering another vehicle towing service in some cases, or hazard and safety notifications. Maybe it's just gone over a particularly dangerous patch of road, maybe icy road conditions, and it can notify other vehicles nearby about what its experience has been in order to warn them. One vehicle could offer to another vehicle the ability to allow the other vehicle to pass it and get on its way faster, and so essentially just yield in traffic or move to another lane in order to allow another vehicle through. One vehicle could offer another vehicle its own sensor data for its use, right? It can offer its own computation resources, its own communication resources, its own storage resources to other vehicles or even other devices that are nearby. And it can offer, although this perhaps I should have put it in the other column, but it can offer, of course, payment for the services that it is consuming. So once you can kind of identify that vehicles have all of these ways in which they can get something from outside and they can give something, then we have the basis to discuss the possibility of financial transactions. So we've got goods and services, and they can be sort of very traditional goods and services, as we saw in a number of these examples of the vehicle acting as a delivery service, as kind of ingesting fuel, if you will, or getting a car wash. So these are all kind of more traditional goods and services. But then because increasingly these vehicles are computers on wheels, you've got a number of digital goods and services, whether it's software, whether it's computation, whether it is sensor data. You've got kind of these digital goods and services, again, that vehicles can exchange with each other, but also with infrastructure or other devices around them. So what are some challenges then that we might face in enabling these various types of transactions? And there's probably a much larger category of them, but just at a very high level, I think some of the challenges have to do with the friction for these transactions. I mean, the transactions to begin with might be very small, what are called microtransactions. The amount of data that you're exchanging and telling another vehicle that I've just gone over an icy patch of road is not very much, right? Even if it does have any value, it's not likely to have a lot of value, perhaps. And so if you have financial transactions that today tend to be very high cost, very high overhead, that imposes quite a bit of friction. You may have concerns about trusting that this data that you're getting is valid, is from a trustworthy source. And so there's definitely an issue of trust that shows up in these interactions. And last but not the least, these vehicles are mobile. They're on the road. They may be in the presence of infrastructure in an urban environment, but they may also be in a rural environment where you're meeting another vehicle on the road. There is no explicit kind of infrastructure, perhaps, that they're both connected to. And so you may have these sort of what are called intermittent connectivity between the vehicles. And so you want systems that can address some of these challenges that are specific to vehicular transactions. So in the research that we've been doing at USC, we've looked at a number of these questions. And I would say each of these is perhaps just a small piece of a much larger puzzle. So I'll just walk through a handful of these pieces that we've been thinking through, and by no means have we covered kind of that entire space. So one work going back a couple of years involved essentially creating a very simple extension of the client-server applications that we currently use on the internet. So today, when you have your browser connected to a server somewhere, you're using the TCP protocol on the internet to allow your browser, which is a client, to ask for information and allow the server on the other end to provide you that data back, right? And this is all going over TCP. You can add some security layers on top of it, which we do. Anytime you go to a website with HTTPS on the URL, you're running your communications over transport layer security, and then below that, the TCP communication stack. So what's missing on this traditional internet communication end-to-end is the notion of trust, is the notion of payment, right? And the work that we did here was essentially to bring in blockchain technology to provide for both a payment mechanism, and it doesn't have to be blockchain, it could be just a traditional payment rail, so long as it's sufficiently acceptable to both parties with respect to the overhead and the costs associated with it. But also to invoke the use of a records medium, which could be a distributed ledger technology, where the transactions as they happen over data now have a much richer set of semantics. You have clients essentially asking for a menu of data or services, getting kind of this data when they get it, sending some invoice from the server to the client, paying for it, getting a receipt for that payment, and so on. So there's kind of a range of additional kind of semantics now that you're thinking of data as something that has value, but by equipping this client-server communication, not only with the data and security layer, but also payments and a records medium, you're able to kind of enhance the capability. And the idea is that this could be used not only in kind of a vehicular setting, but even in a traditional desktop or mobile environment. As you're communicating with servers that you're getting data or digital services from, at least you can do payments as part of that interaction. So this is a protocol that we call streaming data payment protocol. It was built with the assumption that the data itself is not a one-shot piece of data necessarily. It might even be a series of data values that you're gathering perhaps from a sensor. Another kind of step that we've taken is to think through the notion of a decentralized data marketplace. So if you've got a number of different buyers and sellers that want to be able to find each other, who has the kind of data that I'm interested in, who's interested in the data that I have to provide, you need really markets to be able to efficiently match these buyers and sellers. Traditionally, marketplaces as well as data marketplaces have been server-based. So you have some third party that provides this matching functionality, that provides kind of a catalog of products, a set of sellers of those products, and allows the buyers to come and browse that catalog, if you will. But the moment you have a centralized platform owner, you have the possibility that this platform owner or administrator might be able to manipulate what is shown, what the reviews say about the buyers, and perhaps censor some of the ratings in order to maximize the revenue for the platform owner rather than to maximize the value for the buyers and sellers. And so we've been kind of looking at this question of, can you make the platform itself decentralized? What are some of the stumbling blocks? And can blockchain technology help you kind of enable that capability? And so we have some proof of concept of such a decentralized data marketplace. There are some very interesting open problems within this space, one of which we're currently addressing, which is the question of, can you do decentralized ratings? How do I trust that this product is of good quality? Can I set up a review process for data that is somehow allowing perhaps even third-party auditors to examine the type of products that the sellers are providing and give ratings that you as a buyer can trust without necessarily knowing in advance anything about the reputation of the seller? And so what are the right kinds of mechanisms and incentives that are needed to make the ratings itself both decentralized and trustworthy? Getting to the core problem of buying and selling digital goods and services, there's actually a much more fundamental challenge that is called the buyer and seller's dilemma. And it goes something like this. So if I want to buy some digital good from a seller, the seller could say, well, go ahead and send me the money and I'll send you this, let's say it's a PDF file or something. And I go ahead and I send my payment, perhaps as cryptocurrency. And the moment that the seller receives this payment, the seller just vanishes because we were on either side of a network. I didn't really know the seller. And once I'd made the payment, they really had no incentive to deliver on the goods, and they can kind of leave. On the other direction, perhaps the next time a seller offers to sell me something, I say, well, you know what, send me the PDF file first, and then I'll make the payment. In which case I would get the digital good, and I can walk away now if this is over a network and I've used essentially a public key as my identity, because it's very easy for me to swap my identities. They are left essentially without the payment for the digital good that they've provided. And so the problem here is that ideally you would like both of these, the sending of the digital good and the payment for it, to happen simultaneously as an atomic transaction, but they're really two different things. So how do you kind of make that interaction as honest as possible without invoking a third party? So traditionally, the way this is done is that there's a third party market that is giving me the trust that if for any reason I don't get delivery of the good that I've ordered, I'll get reimbursed for the cost, that whatever I've paid for it. So if we want to do this without a third party, you would need to design a suitable smart contract. And this is some work we've done, where we showed by creating a dual deposit escrow, where both the buyer and the seller are depositing some initial security before the transaction happens. We're able to show through a game theoretic analysis that for sufficiently high deposits with respect to the value of the good being traded, you can guarantee essentially that the buyer and seller will behave honestly in this transaction without invoking a third party. And the smart contract is just a piece of code that's running on the decentralized platform. We've looked at also building such smart contracts for computation. So not only buying and selling data, but buying and selling computation on an edge server or a cloud server, again, in a decentralized peer-to-peer manner. How would you guarantee that the data that you sent for computation really got processed? And how do you verify that this computation really did happen? And of course, you can't verify it by doing it yourself, otherwise you wouldn't have asked for it in the first place. And so, building in mechanisms to verify that computation really took place, what's called verifiable computing, is also a piece of that puzzle. Let me see if I can show you this video where we kind of put together some of these ideas in the context of vehicles, looking at how a system for micropayments for these types of digital goods and services can be done using blockchain technology, but with kind of this peer-to-peer model of communication between vehicles potentially on the road. So let me run this. I hope the audio will come through as well.
As they increase in autonomy, connected cars of the future will start to query the infrastructure around them to obtain data about navigation, electric charging stations, traffic, and more. As they encounter other vehicles on the road, they will share such services with each other and coordinate their actions in a dynamic and fluid manner. What is missing today is a decentralized platform that allows vehicles to autonomously negotiate and pay for these data services. Introducing Motive, a framework to enable micropayments for trusted vehicular services that has been developed by researchers at the USC Viterbi School of Engineering's Center for Cyber Physical Systems and the Internet of Things. Motive is a software running on each vehicle with several key components. Beaconing, to notify and listen to other Motive devices over the V2X radio. Link prediction, to estimate the contact duration using privacy-sensitive navigation info. Scheduling of data and compute jobs between the vehicles. Payment, using a blockchain-based wallet via cellular radio. And finally, rating of transactions by each vehicle. We now demonstrate the operation of a prototype of Motive we have built at USC. First, we launch and configure the demo by selecting parameters for the time until the vehicles come in range and how long they will stay in contact. The first vehicle then starts to beacon and listen for a beacon from another vehicle. When it hears a beacon from another vehicle that is in range, it detects and identifies the other vehicle and connects to it. It then checks that the other vehicle has a sufficiently high rating. Once validated, the vehicles exchange information about heading and speed to predict how long they will be in contact with each other. The two vehicles then advertise their services offered and needed to each other. The scheduling service runs on one of the vehicles to determine which services will be provided and in what order. In this case, the local vehicle is providing data about nearby EV charging stations to the remote vehicle. Upon completion, the remote vehicle makes a micropayment to the local vehicle using a blockchain wallet. Finally, both vehicles rate each other using a smart contract. Our design of Motive is inspired by the famous Internet hourglass architecture. Just as all Internet applications run on IP, and IP runs on any network, we envision that all future connected vehicle applications can run using Motive. And Motive can run using any distributed ledger technology, payment mechanism, and V2X communication system.
So just to kind of expand this conversation a little bit, if I may, we've got this question of, how much intelligence does a vehicle have? How much autonomy does it have? So as we move more towards this notion of transacting over goods and services, traditional as well as digital, we can kind of extrapolate a little further in the financial direction and these transactions, and start thinking of what if your vehicle itself was a profit maximizing agent? What if it was making its own financial decisions about how, when, and with whom to buy and sell these goods and services, at what prices, and essentially then to also ask this question about managing its own finances, right? So what does it mean to kind of automate or become autonomous with respect to these types of decisions? So of course, machine learning is one domain that's been emerging that is getting us to rethink everything. And I believe as we talk about financial autonomy, we're going to invoke techniques from machine learning. One area in particular that a lot of autonomous vehicles are already using for their driving behavior is reinforcement learning. To a very rough first approximation, it's this diagram that we have here. You've got the agent, which is autonomous, and it's getting essentially observations from the environment of what is called the state of the environment. It then has a policy which tells it what is the action it should take if that is the state of the environment. And when it takes this action, it gets a certain reward. And the process of learning here essentially is through that feedback of the rewards, which actions are best suited to which states, right? And so you're learning, for example, in the case of driving, in fact, often people don't realize that some of the earliest papers, academic papers on autonomous cars go all the way back to the 70s. They showed very simple examples of vehicles that were just steering left or right as a function of their observation of the edges of the road, right? And so if they got too close to one edge, they would steer right. If they got too close to the other edge, they'd steer left. And so you've got essentially this feedback loop of taking observations and taking actions. And then if you set up kind of a reward function that says it's really bad to drive off the road and it's great to stay on the road, and if you can keep getting that feedback over time, you can essentially train this agent through the reinforcement learning process to drive. And of course, today's autonomous vehicles are doing much more complicated tasks than just drive left or right. But kind of at the core of it is this view of the environment essentially producing state that's observed, actions being taken by the agent, and then rewards coming from the environment that allow you to kind of improve the agent's behavior. So we can take this idea from driving to the financial transactions as well. In fact, reinforcement learning-based algorithms are already used for financial applications. There are, for example, algorithmic trading bots that people have designed that essentially get signals from the market. This is their observation of the state of the world, and their actions might have to do with buying or selling, having to do with portfolio allocations. And then, of course, they'll get some feedback as to how good those decisions were given their observations of perhaps the historical trajectory of these prices in the market and any other information that's relevant, and essentially improve their actions over time and train to do well in that kind of financial environment. So following that line of thinking, we can ask, why not allow a vehicle to operate its own wallet, its own buying and selling decisions, what to buy, what to sell, with whom. Get it to really automate some of the investments it makes. So if it has some balance between what it's selling and what it's buying, what does it do with that balance? Can you actually connect it to a trading agent or put a trading agent on the vehicle itself? Can a vehicle actually somehow engage in fundraising? There's actually some fascinating ideas of decentralized fundraising platforms that have been developed over blockchain technology. And if a vehicle can sufficiently convince people that it has this kind of value going forward, that if you are willing to invest in it, you would get these kinds of returns back from the vehicle, perhaps as a function of where it's operating, what kind of growth you're seeing in those markets, et cetera. You can almost imagine trying to automate that process of fundraising itself. Going from one vehicle to collections of vehicles, would it actually be meaningful for this vehicle not to operate completely autonomously, but perhaps as a fleet? And not as a fleet that was kind of pre-designated by humans, but a coalition, if you will, that is formed in its own self-interest. In fact, there's a whole area of game theory called cooperative game theory, which is you have a collection of agents that are self-interested, but in their self-interest, they find value in cooperating with other agents. And coalitional game theory, or a part of cooperative game theory that looks at sort of the formation of coalitions that deliver the best value for the individuals within that coalition. And so you can imagine this type of cooperative game theory being applied to allow groups of vehicles to somehow team up with one another, not very different from the ways in which humans team up with one another to form corporations or institutions or organizations. So I've kind of laid out these ideas that go a little beyond just autonomy of driving on the road to getting into financially autonomous vehicles, thinking about all the ways in which vehicles can be doing things on their own. And of course, this brings up a lot of questions, and I leave them as questions because I don't profess to know the answers to these. And one question is, in a world where you can increasingly offload autonomy, not just of driving, but to their own financial transactions to vehicles, what is the role that's left for humans to play? And is that vision that that's painted with all of this something that is desirable? And perhaps the answer even is different from place to place, from economy to economy, or culturally. There may be reasons why these questions might have to be debated. And I think with everything to do with automation these days, it has an air of inevitability about it, but I still think there's a lot of room for kind of political discourse and thinking through the pros and cons of the technology adoption, and what it brings, but also what it leaves off the table. I think I've managed to skip a slide somewhere, but that's okay. I'll maybe cover it in some of our Q&A if we have time for it now. So I'll stop with that. Thank you very much for joining this morning. I'm happy to take some questions, and perhaps we can have a short discussion as well. Thank you.
Thank you so much. Does anybody have any questions?
Yeah, Jim Mason.
Excellent presentation. You covered an awful lot of ground. And the one thing I'll say is that I had looked at the escrow transactions that you defined. And the one thing that's clear on the smart contract side is when you're defining those escrow transactions, in theory, the smart contract should automatically be able to complete the life cycle, that if the conditions aren't met, the contract in a sense automatically could revert back to an original state for both parties. Does that make sense?
Yeah. But did you have a question to go with it?
No, just to see that in a slide, when you're talking about escrow transactions, in a sense, the extent of the life cycle of the transaction, that's all.
Yeah, so I think that's a very good point to raise. So there's sort of these different conditions, right? Either everything goes as smoothly as you can expect, everybody behaved honestly, the goods were delivered, the payment was made, in which case this life cycle should end with the escrow being returned back to the buyer and seller. But of course, there are all of the other cases where one of them is unhappy or both of them are unhappy. And at least in the theoretical work that I described and the contract that we designed and the mathematical analysis of it, in order for this to be a credible system, you will actually need in these different cases, to the extent that you can ascribe the fault, if you can tell who did not follow through on their end, their escrow has to be slashed, that they have to actually lose their escrow if they don't do what they're supposed to do. And there may be a timeline associated with it. There may be a timeout period within which you must provide some evidence of either having done something or not having done something. And so part of the design of these smart contract is thinking through the timeline, thinking through that life cycle, thinking through the conditions under which the escrows will be slashed or burned, and conditions under which they will be returned. And part of the game theory analysis is that you have to have a credible threat of losing your deposit if you don't meet certain conditions for correct behavior.
You're right. There's complexity there in the architecture, so that different types of transaction models, if you will, would require different types of enforcement. So in my world, I come from an auto auction marketplace, and there, in a sense, in the auto auction stuff, there might be something like a restocking fee that would be part of that transaction that doesn't go through because I didn't get payment for you by a certain time, kind of thing. But in a sense, the parameters of what that double escrow transaction is when it unwinds, if you will, unsuccessfully, are unique to each transaction type, obviously.
Absolutely, yeah, that's 100% right. I think because you may have certain additional fees that you have to pay regardless of whether it goes through or not. You have to kind of factor that into account when you enter into it. The amount of escrow that you need also depends on the nature of the transaction. And so, yeah, there's a number of other parameters. We also have some designs in the streaming data payment protocol paper where we talk about, if it's going to be not just a single one-time transaction, but a series of transactions, another way in which you can play with this is to allow a certain window of transactions to slide without payment before you withhold further transactions or before you kind of put a stop on the process. And there's also a parameter there that has to do with how much are you willing to almost incur as the cost of doing business in this system in order to just kind of keep things going in a fluid manner.
Thank you.
Thanks for the question, Jim. Any other questions?
Hey, Bhaskar, it's Chris. So thanks for the great presentation. One of the things that we've said for a couple of years is that while everyone is focusing on physical autonomy of vehicles, the self-driving, in some sense, the more interesting is the financial autonomy, this idea that cars will be participating in an ecosystem. And one of the things we've said is a prediction that the financial economy will come first. Why? Because putting a profit function in the car is a whole lot easier than sort of solving the world's hardest AI machine learning problem, which is autonomous driving. And B, there's probably a lot more financial reward to creating the ability for the card to participate in a financial ecosystem and pay-as-you-go mobility. So I'm curious as to what you think. I think you're in a great position to sort of assess the progress in both autonomous driving, the physical and the financial. What do you think we'll see first?
I think that's a great question. I want to say there's elements of this financial autonomy that are easier to put in earlier than later. And I think elements that have to do with just giving the car a wallet to pay for, charging capabilities, pay for tolls, even simple amounts of sensor data exchange and so on. Those types of transactions should be very easy to build into vehicles sooner than later. And my gut feeling is it's going to happen kind of hand in hand with all of the progress in autonomy to some extent. But the easier elements of this as they get sorted out in terms of use cases where there's real value, I agree that there's, purely from a implementation perspective, from a safety criticality perspective, it's actually a lower bar to do financial autonomy than physical autonomy. And so you're right. I think that there are elements of this that seem easier to implement, whether it's pay-as-you-go models or also even sharing of the vehicle. Something I didn't dwell on enough, perhaps, is the question of who owns the vehicle, right? So today we have an individual driver owning their own vehicle. Increasingly, we're seeing for financial reasons, particularly as we bring in autonomy of the vehicles, more shared ownership models. And I think the early stages are still like multiple people sharing or co-owning a vehicle, but it might get to the point where you can also have fleet ownership, of course, but you can also get into some novel settings where the vehicles are themselves essentially corporations, if you will, that have shares. And what it means to have a piece of the vehicle essentially is you have a stake in its profit. And so to the extent that it is a profit maximizing agent and it's doing a good job of raising, having significant profit, then you can have these types of ownership as well. And it seems to me that enabling those types of capabilities is possible with just today's technology. It doesn't really need a whole lot of future technology in place.
Thank you.
Yeah. Oh, can I ask a question?
Yes, please.
Okay, sorry. This is actually more of a comment on what you just said. There is a legal structure, I don't remember it right now, that basically allows you to create a corporation, and then you basically pull a trick and you can remove the humans from the corporation, right? Which would allow, it's sort of a legal hoop to jump through to allow, in a sense, the car to be its own owner. And a use case you could really see is if there was AI-powered, fully autonomous cars with their own wallets. At that point, Uber doesn't need to deal with humans anymore. Uber could buy these vehicles themselves, sell them to the car, so sell the car to itself, removing all those cars from its balance sheet, and then the car would just simply pay back the loan using its wallet and profit, over time. And all of a fleet of cars, no humans, and nothing on their balance sheet but loans. So that's it.
Well, you've just described a pathway to implementing what I've described. Absolutely. I think that's the kind of thing I see that's well within the realm of possibility. And as you're pointing out, there's even legal structures that might, and I think maybe there's some jurisdictional issues there. I don't want to comment on beyond my expertise, but yeah, I think that's the kind of possibility that's on the table here.
Any other questions for Bhaskar? All right, I think we can wrap it up. Bhaskar, thank you so much for speaking to us today, sharing your vision for the future of mobility. As mentioned, the recording will be posted up on our website, dlt.mobi, in the coming week or so. Until then, take care, everybody, and stay healthy.
Thank you. Thank you very much.